aware of the kind of problems created by inflation. For several months, about still 6-8 months back, we had to face the problems caused by double-digit inflation of WPI, something in the region of moving from 10.2, 10.46, 10.6, 10.8. Thankfully, the numbers have come down, but still something in the region of 7.25, 7.55, which is a fairly high number given our state of development. For various and statistical and other reasons, this WPI number is the one number which has been greatly discussed in the electronic and print media. But here, I'd like to bring to your notice that there is some kind of a divergence, some kind of a dichotomy even within the inflation numbers. If you look at the WPI numbers, wholesale price index based on about 400 odd commodities, it throws up inflation something in the region of 7.25, 7.5. But there are 6 other indicators of what we call the retail inflation, of which obviously the most important is the CPI-IW, Consumer Price Index for industrial workers. And unfortunately, all these 5-6 numbers show a very disturbing trend, and they are still in the region of 10% consistently even from January onwards. So this throws up some kind of a disconcerting picture. If we look at the IIP numbers, the index of industrial production, the industrial growth in the country, there's one of the basic features of industrial growth for the last 5-6 months is that it has been marked by very high degree of volatility, which has brought into question even the credibility of those numbers. But even if we were to take these numbers at face value, what comes up sharply is that the industrial growth has decelerated in a very significant manner. What is worse is that for the last 4-5 months consecutively, we see that there has been a contraction, not just deceleration, contraction, decline in real terms in case of investment activity, in case of capital goods. The recent number which came out 5-7 days back, it showed up even more disturbing feature of the nature of the industrial growth. What it showed was earlier they were saying that there could be some kind of a skew. Basically, there are 2 drivers of the Indian economy, as indeed of any economy. You can grow either through the investment channel or the consumer channel. During the phase of up to 2008, when India was on a consistently high growth path of 8.8, 8.9, 9%, thereabouts, there was repeated talk of a double-digit GDP growth. Then we slipped down, came to 7%, 6%. So in that phase, India was in some kind of a sweet spot where we had excellent growth both in investment and in consumption. Recent IIP numbers throw up a disturbing feature in the sense that the capital goods production has been contracting for the last several months, but now we see that even the consumer growth seems to be petering off. This is a real area of concern and needs some kind of a focused attention. If we look at the policy fronts, then there has been no headway of some measures which were announced by the FM about 2 years back, goods and services tax, direct taxes code. Now that we have a new FM in the place, Mr. Chidambaram, there are high expectations from him, but let us see if going forward we are going to fare any better. These are some of the elements of the kind of a broader picture we have. I think in the case of global financial meltdown, someone called it the new normal. So this is the new normal of the Indian economy, that we are characterized by some kind of a stagflationary situation where there is stagnation on the GDP front, industrial growth, and simultaneously we have high inflation. So this is some kind of a double whammy which affects us all and needs corrective action with a sense of urgency. However, to place, this is one part of the story. But I would also like to draw attention to the other part of the story. These are problems of a short-term, medium-term nature. But my view is that over the long haul, we should still do very well. However, as I think John Maynard Keynes famously quipped, long run has no meaning in life or in economics, because in the long run we are all dead. Having said that, some of you might remember October 2002, early 2003, when India emerged on this high growth path, and there was a sustained campaign run by the government of India of what they called India Shining. This India Shining and consistent growth, high growth with low inflation, these were the two basic features which characterized the development pattern at that time. But in that time, there was a report brought out by Goldman Sachs. There was one Indian lady, Rupa Purushottam. There was another American, I forgot the name. This report provided for the first time some kind of a theoretical justification, the theoretical underpinning of this kind of a campaign of India Shining, that feel-good factor which it generated in the economy in India as well as abroad. What was the basic thrust of that report? The basic thrust of the report was that India has, and the kind of evidence we find here today in this hall, India has a very young population. This they characterized as some kind of a demographic dividend, and this demographic dividend needs to be leveraged going ahead, and on that basis they extrapolated the GDP numbers, the growth pattern, and came to a conclusion that by 2040 and 2050, India could well be the most powerful economy in the world. But even that time, there were some concerns. In all that debate and discussion, there was sometimes we tended to be oblivious. We tended to gloss over some uncomfortable facts. This demographic dividend, this consistent growth path of the Indian economy, all that has been discussed and debated ad nauseum. But that is a fairly comprehensive report. I think I read it long time, about 7-8 years back, but still I think towards the later part, that basic finding has been discussed. But sometimes we tend to forget that this finding was qualified by certain other factors. This finding, what you call caveats or riders or disqualifications. Even in that kind of a report, which was strongly supportive of India's growth prospects, the authors clearly identified and isolated three basic factors. What were those factors? These factors related to education, health, and employment. And these things remain as valid today as they were 6-7 years back when the report first came out. And in case these things are not addressed, the concerns of education, employment, and health, India's demographic dividend may well turn to be a demographic disaster. On a more theoretical kind of a plane, what we find is, if we look at the GDP numbers, if we look at the growth rates across countries, we have about 200 countries in the IMF and the World Bank data set. We find that consistently India has outperformed the global growth by a growth percentage of something like 1.5 to 2%. This remains valid even today. Another sub-theme of the conference is also on regulation, but regulation has been there as long as the banks have been there. But in recent years, especially in the last few years, particularly in the wake of, there have been some what we call watershed developments. Of course, the financial crisis of 2008 was a watershed development, and the development proceeding simultaneously on parallel tracks has been the Basel I, Basel II, and the Basel III norms. What you find is that diverse economies across the global spectrum have been devastated by global economic crisis, whether you take the Mexican crisis of 1994, Russian-Brazilian crisis of 1998-99. what we find is even in the East Asian countries around 98, 99, we had a series of economic crises. What basically comes out that some kind of a, to use a French word, a sense of deja vu comes out of these repeated patterns, a sense that if you use Marx in Karl Marx's analogy, some kind of these crises are built into the system and they are part of what could be called systemic crisis. However, in recent years, the frequency and the intensity of such crises has increased considerably, and another important finding which you find from all countries is it is generally believed, commonly believed, that the more you liberalize, the freer you are from the problems of financial crisis. But again, it is not so commonly realized that about 3 years back, the IMF carried out a detailed study of 200 countries for a fairly large period of about 100, 150 years, and the findings which threw up is that contrary to what was popular perception, what was commonly believed is that the nature of financial liberalization, the more financial liberalization you have, the greater possibility there is of some kind of a financial crisis hitting the system. I would also like to briefly refer to the issue of financial inclusion. Sometimes there is a tendency to look at financial inclusion as some kind of a new concept, but my submission to you all here would be that this is something which is not new at all. At the global level, I am reminded of President John F. Kennedy's inaugural address delivered way back in 1961. When he said, and he said it very powerfully, I quote John F. Kennedy, that if a free society cannot protect the many who are poor, it cannot save the few who are rich. This was in 1961. If I go back still further, the American War of Independence said, I think it was 77, the Declaration of American Independence way back in 1776, that we hold these truths to be self-evident that all men are created equal. Similarly, in economics, widely known as the father of economics, if we look at Adam Smith, widely known as the father, there could be differing opinions, but there is a clear consensus that if economics is said to have started with one person, maybe Adam Smith, by general conception, would be taken as the father of economics. His monumental work, An Inquiry into the Nature and Causes of Wealth of Nations, which provided the basis for fast growth of this subject, there are a lot of references, there's a lot of emphasis, stress on the need for a just and equitable society. This was on the international plane. If you look at the domestic plane, even our the first 5-year plan, this set the basic objective. What should be the basic objective of economic planning in India? The basic objective has to be a sustained increase in per capita income and standards of living of the common people. This was way back in 1950-51. India got independence in 1947. From 1950-51, we started on a process of planned economic development, and this is how the first plan, 1950, defined what should be the basic objective of economic development. Subsequently, we had a lot of programs, what they were called IRDP, Integrated Rural Development Programs, so many other welfare measures. All this had a very strong element, had a very strong undercurrent of what we call, now fashionably call, if I may say so, financial inclusion. But my submission to you is that financial inclusion is perhaps as old as the hills, has been there for a long time, and we need to broad base the pattern of economic development for a just and inequitable society. However, given the constraints that the society faces, that the economy faces, if I do some number crunching, we find that about 51% of the population, even after 6 decades of economic development in India, where the growth rate has jumped from what we call the Hindu rate of growth of 3.5% to over 9% in about till 3-4 years back. and banking has been the major driver of economic growth, still what we find, what is the situation, what is the ground reality that we are confronted with today? We find that 51% of the people still do not have deposit accounts. If we look to borrower accounts, if we look to loan accounts, not even, this figure is not even in double digits. There is an element of conjecture built in these numbers. Pakka data, firm data is not available, but still anecdotal evidence, and based on comprehensive surveys carried out by the Reserve Bank of India, Planning Commission, and other government and regulatory bodies, it shows that this kind of a number is something around 9%. So if we take this as a safe number, around 9% of the people have access to credit facilities. Again, if we take insurance, remittance facility, insurance again, it is said that a lot of data has been brought out that about 5 to 6% of the Indian population is covered by insurance. Again, this is a pathetically low number, needs to be increased. Remittance, in the last few years, last 3-4 years, RTGS and NEFT have made significant changes. They have transformed the entire payment landscape system in India, but still the poor people need to be fully benefited from that. Maybe the upper strata of society has benefited more by this. Financial inclusion, going forward, it is a task of monumental proportions. So my submission would be, basically we have to look at this through three ways. There has to be a three-pronged attack on the issue of financial inclusion, given the kind of the comprehensive nature, the monumental size, staggering size of the problem. One is we have to use the brick and mortar, the branch model. Second, the BC model, business correspondent, business facilitators. The Government of India, RBI, have repeatedly stressing on the need to have more BCs, but maybe we have to incentivize the whole system. It has not taken off for valid reasons. The amount of which we are giving to these business correspondents, I think something in the region of 2,000 rupees, when even the Narega payments per day would work out to be much more amount per month, does not make sense. However, they may have their own compulsions, so but the whole scheme needs to be tweaked, the whole scheme needs to be modified so that this could also significantly drive financial inclusion. Another important element of financial inclusion has to be mobile banking. I think all of you, I don't think there would be anyone in this hall would be without a mobile phone. Mobiles have completely transformed the telecom story in India. And there are increasing attempts to link mobile payments and receipts through the mobile phones. Globally also, we find that this is a very cost-effective way. If we transact through the brick and mortar branching model, what we find is a single transaction, a single voucher costs the bank something in the region of 45, 46 rupees. If we were to shift to this internet model, it costs about 3 rupees to the banking system, whereas mobile, it is something like 5 rupees. So given the conventional channels, there is an interest of the banking system also, apart from the larger societal goal of emancipation, of upliftment, that there has to be focus. And some very comprehensive studies of this mobile banking model of financial inclusion have been carried out at Harvard Business School. The HBR carried detailed study that even in some kind of societies which are still not as literate, as advanced as India, for example, Nigeria, other parts of Africa, this model, I think one country they call it M-Pesa. So these are the models they have used, and they have successfully transformed the banking environment in those parts of the world. There is no reason to believe that if those kind of systems could work so successfully there, why it should not work as successfully, if not more, in India. So I have given you some of my thoughts on some of the basic issues impinging the subject. If you have any questions, I'll be happy to take it. Thank you.
Thank you, sir, for sharing your thoughts about global financial meltdown and its effect, and also the way forward for us. I now invite Professor Sunil Kumar Parameshwaran to share some thoughts with us.
Dignitaries on the dais and off the dais, fellow faculty, my dear students. Very happy to be here today. This is the second year that we have running Horizon. Last year was the first time. I think it's a very good initiative taken by the students, and glad to see the kind of efforts that you people have put into it. I was wondering, what crisis are you referring to? Is it the global crisis or the Indian crisis? Well, in India, we're always running from crisis to crisis. So the word crisis is a bit misleading. But I think some interesting issues were brought out by Mr. Sharma and Dr. Rao before that. One thing which I've learned in India is that change is always going to be evolutionary, never revolutionary. Probably something to do with our society. Somebody once asked me, why is Hindu society so change resistant? I said, simple, it follows Ohm's law. So but yes, we will never have the kind of rapid growth that you may anticipate in other setups. But the important thing is to sell the story properly. One of the key problems with reforms is that the common man has never been made to understand as to what is in it for him, okay? Which is why you have so much of resistance. Remember, people's minds, according to me, have been poisoned by years of left-wing ideology in this country. Okay? And if you're going to do something different, if you're going to do something that moves away from that model, it has to be properly sold. I was a consultant to an NGO in Delhi, and the chief asked me, do you know anything about rural health insurance? So I told him about the scheme in Karnataka where you pay a premium of 5 rupees a month and you get coverage for tens of thousands of rupees. And this man, who was an economist, had not heard of it. Okay? So how do you expect a simple Indian living in a village to know what is fiscal deficit, what is a need for, hiking diesel prices? I'm very glad that the Prime Minister at least took the effort to make a speech to the nation yesterday. Okay, we embarked on reforms in '91, and the first government which launched reforms lost the elections. Okay, well, I think the reason is very simple. It was not properly